I would like to hear from Mr. Egan and Mr. Anderson whether you have any general comments on the way in which this market is working in the UK and whether it works for you and whether you think that it's going to deliver the government's objectives.
So if I might broaden it out a bit beyond the electricity market, if I may, because we've heard quite a lot about it, and it's obviously a very important part of it, but at the end of the day, it's about a third of the energy market in the UK, the other third being obviously transport, and the third being heating. For us, it's partially working, I would say. We have well-documented interests in exploring for shale gas. Irrespective of how we generate our electricity, there will be a requirement for gas in the UK, and I think everyone accepts that, all forecasters accept that. But it is, for us, been remarkably difficult to get to the point where we can drill some exploration wells. To put that in context, we started our application process, and Lord Hollick has heard this before, but we started in mid-2013. We submitted an application in 14. It was heard in 15. We got an appeal in 16, and we might drill a well in 17. So that's 4 years. We're still subject to planning conditions, touch wood. So that's 4 years to get to the point where you can drill a well. In the US, they're drilling 30,000 a year. So in the time it takes us to drill one, they'll drill 120,000. That might give you a pointer as to why gas prices are $2 a unit in the US and they're $5 a unit in the UK. There's no natural reason why that has to be the case. So I think the government has got good intentions. We're grateful for their support, but frankly, our investors are patient, but taking 4 years to drill a well is beyond most people's patience.
And more broadly?
I think it's always a challenge. I was interested in that debate. I mean, and the comment from Lord Forsyth, where he quoted Amber Rudd, where she specifically talked about security of supply. But what you're hearing is other factors coming into it: security against a requirement or desire to decarbonise. They're not the same thing. And you can get a secure supply without it being low carbon. And it's quite easy to get a low carbon supply without it being secure. we can see that already. Getting the two together, quite difficult. And ultimately, and this is my personal view, somebody has to say something is more important than something else, because they're never all equal. And somebody has to make that call. If you want low carbon to be the most important, you probably have to put up with some security and probably have to put up with higher prices.
And how confident are you about the prospects for carbon capture and storage?
Well, as I said, we are doing it today, and we're doing it to the tunes of 2 million tons per year. We know that pre-combustion sequestration is much easier than post-combustion. We were very much involved in Shell's Peterhead project. We've been involved in other projects as well. It won't be easy, but we're very optimistic that in the long run it'll be possible to do it. Right now we're spending a lot of time and effort on the transportation and storage part of CCS, which is also very important. But in the long term, we have to face up to it that in a decarbonized world, that is the only way gas will survive in the mix in the longer term, and that's a strong incentive.
So what more should the government be doing in order to hasten this process?
Well,
you suggested that you were looking for, in a sense, this official support, but what kind of things would you like to see happen?
Well, I think the carbon floor is one approach. That incentivizes us, again, with the reference to what we've done in Norway as a direct consequence of CO2 tax. But also more targeted, I'm sure, support in any shape or form could achieve much the same. Ref again, I don't know whether it was called a subsidy at the time, but the basis on which Shell promoted their project up at Peterhead onboarded, I think, several players, serious players in the industry.
May I make a comment on that? So SSE, obviously Peterhead's an SSE station, so we were involved as an investor in that potential project. And what made Shell and ourselves confident we could deliver something was the stable construct of a CFD mechanism. And I mean, there was material amounts of money spent in terms of developing that project to a state. And look, I suspect, I can't speak for Shell, but clearly from an SSE perspective, we were disappointed that didn't go ahead. But it gives you an idea of A, the structure that might be required to do these highly capital intensive projects, and B, also from an industry perspective, trying to manage this transition to a lower carbon electricity market. The need for stability and policy is really important.
And finally, we've had a lot of debate and discussion here about just what the costs of renewables are and when it is that they're likely to be competitive without subsidy, and the whole issue of taking into account the costs of backup generation to deal with the intermittency issues. I would like to hear from each of you about how you see the prospects.
Yeah, so if I could again slightly take us back, I think there's been remarkable progress actually by the industry in terms of reducing the cost of particularly onshore renewables, but equally offshore renewables prices have clearly come down. I think that is testimony to a very stable policy that's existed within the UK, which has allowed the UK and indeed its asset owners and developers to get a very mature supply chain and put pressure on the cost side. When we were building onshore wind farms back in 2010, assumptions we'd have made about contingency, project management cost, capital overrun, etc., would be, if we did the same thing today, our assumptions would be considerably lower, and that helps us to build projects at a cheaper price. We are spending a lot of time in SSE trying to find a way of delivering renewable capacity in a subsidy-free world. Key to that will be a stable and robust carbon price. I think that's important to say. But equally, we think that in the longer term, it will be possible to do this without any direct subsidy, or at least some kind of CFD arrangement which attracts the investments. So we're making good progress as an industry. I think it is really important as a nation we don't kill that progress off.
Well, darling. Capture and storage. I remember visiting the Peterhead project 13 years ago. I remember launching a competition to do something which I think developed into another failed project in the Firth of Forth. To be realistic, are we ever going to see CCS? Because people keep saying that they know about the carbon, they know about the capture, they know about the storage, but they can't seem to link the three of them. Or is this something that's always going to be at least 10 years away?
So if I could answer that from my experience as the person responsible in SSE for Peterhead Power Station, I was very close to not the project you described, which I think was a BP collaboration, but the Shell collaboration at Peterhead. And we believed after many years of engineering studies and people much brighter than me making decisions about how all this fits together, that we had a very practical, workable solution at scale. So we believed we had something that could be delivered.
And what killed it?
So the government decided not to go through with its competition on the CFD process. So we didn't actually get a chance to bid that through the process. So
where else in the world are they actually doing it?
So I'm not aware of anybody at that scale elsewhere in the world. I think there may be, and I'm slightly talking from memory here, I think there's a power station in Canada where they're doing it off coal, but I don't think it was a gas solution. But maybe Tom Martin, you know.
This was, I think, the key project last year. There were others, but they were much further down the merit order, if you will. I agree very much with what Martin says. There were very realistic hopes of making this happen. Our company was, again, focusing on the transportation and the storage part of it, and Shell was pretty confident on the carbon capture part of it. We are doing this already in addition to the Sleipner field, as it's called in Norway. We're doing it in the far north in connection with LNG already. We're doing it actually in Algeria, in Amenas also. So it happens, and it happens close to the well typically today.
Just on that Sleipner field, the information we've been given is that you've stored 14 million tonnes of CO2 to date. Is that correct?
I can't vouch for that total number, but roughly in Norway, 2 million tonnes per year.
Right.
And so what's the cost of that been?
This was actually built into the original concept of the field, and as such it was much, if you will, much less costly than if it had been bolted onto an already existing facility. I don't have the numbers, but I'm sure we can provide those.
Not even a rough indication?
No, I don't, I'm afraid.
And to what extent was it dependent on there being a specific tax on the CO2?
Very dependent.
So, and the tax on the CO2 was what, $50? Or?
It is now. It's ratcheted up from a lower level initially, but it'll continue to ratchet up from where it is today.
Right. So, presumably, therefore, it must have been less than $700 million.
Again, I can't vouch for the number, but I can definitely check that and have that.
If you could, let us have that response. Lord Layard.
I wondered if you could comment on the outlook for solar. We've talked about everything else, but what about solar?
So SSE doesn't have any significant solar interest, so I must admit I'm no real expert on it. So I suspect you'll be as informed as I am. I mean, clearly when I talked about it in my opening remarks, I wasn't talking about necessarily industrial solar. I was talking about the fact that the rise of solar panels on domestic homes and the significant output that can give on a kind of sunny day. But I'm not really sure I know the trajectory on solar beyond that penetration is probably slowing down as a result of reducing subsidy for that technology.
Maybe we could explore the impact of the low gas and oil prices in the world at the moment on your businesses and how you are thinking about how that might work out in the future.
Perversely as it might seem, it's rather good for our business at the moment, being an exploration company with the high-class problem of no revenue. So we are finding that the cost of services has declined dramatically. So it's costing us a lot less, or will cost us hopefully a lot less once we get started to drill and test the wells than it might have done a few years ago. And another perhaps perverse, perhaps not, depending on where you sit, impact of Brexit has been that we're funded in dollars, so we get more pounds for our dollar than we did 3 or 4 weeks ago. So again, that has helped for where we sit. Obviously, as we move through into a production phase, hopefully the opposite will come into play, where we'll be hopeful for somewhat higher prices. And I'm not even going to try and forecast what the gas price will be because I'll be wrong. But at least of late, US prices have been picking up and UK prices have been picking up as well. So we might hit a perfect point in the market if we're lucky.
So I can say from our side, we produce roughly 2 million barrels of oil equivalents per day, and we still have a growth trajectory. So near-term projects are still going on as planned. You might know that we are developing now the £4 billion Mariner project offshore the UK, which I understand to be the biggest in the UK now for the last decade. But of course this has hit our industry very, very hard. But there's a lot of good coming out of that, and one good thing that's coming out of that is that the industry in total is slimming down, which I think was very necessary. And also we see that addressing the costs as vigorously as we are, not only our company but the industry in general, is also reducing the break-even price of new production, which should benefit end consumers in the longer term. And just to give you one example, we have an oil field up in the very far north called Johan Castberg. First time I heard about it was around $100 per barrel break-even. Then when it was first or past the first hurdle, it was just over $80 per barrel. Now it's at 45. And we thought that absolutely inconceivable at the time, but it has proven possible. And it's proven possible across the industry, be that in shale or be that in conventional oil and gas.
And for SSE, I'd characterise prices over the last 12 months as extremely volatile rather than low. I mean, I think 6 months ago we were looking at probably a prevailing gas price of 30p and an oil price of $30. I think today it's roughly $45 to $50 a barrel of crude, and the winter gas price for the balance of this winter is probably near 50p. So there's a certain amount of volatility in that, and I don't think it's necessarily hit our investment strategy. Our investment strategy is based around being balanced and trying to mitigate across that whole chain. I think probably interestingly, it probably in a world of commodity price volatility, and it is really key to bear in mind that the UK as an importer is exposed to global events like it probably wasn't 10 to 15 years ago. For me, that stresses the importance of having mechanisms which provide base remuneration to assets outside of the volatility of commodity prices, and I think that's probably a significant thing I'd say.
Lord Livermore.
I wanted to ask whether you, when you expect exploratory drilling for shale gas to take place, and whether you think government policy is now clear enough to encourage development of the industry.
So I think we'll be the first to drill wells. So we now have approval to drill 4 wells in Lancashire. We're going through the planning conditions with the County Council. We'd expect to have discharged those by the end of the year. Start site construction probably the beginning of next year, drill the wells second quarter of next year, and be testing them by the end of next year. So that's for the initial 4. These will be the first exploration wells drilled into UK shale, certainly not the first into shale or the UK obviously, but the first into UK shale, horizontal wells tested. So they'll be very closely watched. We're obviously very technically excited about it, but I've been long enough in the oil industry to know that the proof of the pudding's in the eating, so we'll have to drill them and test them and flow them. Does that answer the question?
And in terms of government policy,
So the government's policy has been very supportive. I think the issue that we've found is one I've alluded to earlier, is translating that through the Town and Country Planning Act is a fantastic experience that I wouldn't recommend for anybody. Yeah.
No, our company is also involved in shale, but only in the US. We had a look at the UK some time back as part of a global survey together with Chesapeake of the US, but we decided against going into the UK.
What were the reasons why?
Well, we believed we were operating more prolific in a more prolific basin in the US than what the UK could offer, but I think it was primarily what we call the above ground risk, not so much government policy, but it's a fairly densely populated country, this, and there have been obstacles, if you will, to our activities in the Marcellus field in the US as well. We thought they might be even tougher to overcome here.
Can you see a situation where you would reconsider that decision in the UK?
You can never say never, but I don't expect that. For us, it's much more cost efficient, at least based on our own calculations, to develop offshore fields and our offshore Norway assets, and then bring that gas into the UK via pipeline.
I hope we'll convince you otherwise.
Yeah.
Good terms. Mr. Egan, what is the surface area of that you have to take in order to drill a well?
Quite well. A well is very modest. You could drill a well in that area.
No, but the whole kind of depot.
So a typical site. So our site in Lancashire, where we're drilling 4 wells, is 2 hectares, which is about the size of two football pitches. But on 2 hectares, you could fairly easily fit.
It's 2 hectares for each of them.
No. The whole site is 2 hectares. We're going to put 4 wells on a 2 hectare site, but you could put 40 wells on a 2 hectare site. So the surface area is probably the most modest of any energy development.
So the issue here isn't the land take, it's all about access, isn't it?
Yeah, the issue tends to be typical planning issues around traffic and noise. That the land take for shale is order of magnitude lower than wind or solar or nuclear or anything else per unit of energy produced, because it's all happening underneath the ground, 8,000 feet underneath the ground. So the land impact, the surface impact is quite small.
Thanks.
Baroness Wheatcroft.
How do you square the production of shale oil and gas with emissions targets?
Well, I mean, the Climate Change Committee squared that, and the government have squared it. But in terms of how I square it, we're going to need gas, and that's going to have to fit into emissions targets. Otherwise, we're going to have to shut off the heating and the cooking in the country, and that's not going to happen. So really, what we have to demonstrate is that we can produce gas at lower emissions than we can import it. Now, you've got to remember that emissions for us is revenue.
Yeah.
So we're burning dollars or pounds in terms of emissions. So, people say, well, we have to be heavily regulated. We don't have to be heavily regulated. That's our product. That's like Tesco's throwing away its food. So best practice, you can get down to less than 1%. And there's no reason in the UK why we can't get down to less than 1% emissions.
And do you think the government has now provided a regime in which you're confident enough to invest in shale? Obviously you do.
Well, shale is quite an interesting investment proposition, quite different to, say, a Hinkley Point or even probably more akin to a power station in that it's an incremental investment. So each shale production pad, as we call them, or production site, is a self-contained investment. And so it's a bit like a cookie-cutter approach, not like the North Sea. You're putting in several hundred millions, or as we just heard, $4 billion. That's a big gamble. If the oil price tumbles, the day after that comes on, everyone's very sad. Whereas a shale can be a much more. And for large companies, we're not a large company, but it's useful to have shale in their portfolio exactly for that reason, because you can balance the $4 billion investment with $10, $100 million investments. So yes, people are comfortable to invest in 4 wells. The next test will be, are they comfortable to invest in a production site with 10 wells or 15 wells or 20 wells? We don't get any government money. We as a company, we're private equity backed, and in due course we'll probably have to go to the equity markets or the debt markets to scale up. Right. I think there's still an appetite to invest in oil and gas, particularly gas in the UK, but we'll be testing that.
And one area we haven't talked about, and I wonder if all 3 of you could tell me what your projections are. What do you anticipate will happen to energy use in this country?
It's a bit like the energy price, but I'll have a guess. Most people say gas will come down, not least because we are looking to increase renewables in the electricity sector, and that's probably the case. Equally, the population is going up. And I don't know whether energy usage per head, probably a better position to say it, but I don't know whether it's actually going down that much. So I would expect there'll be a marginal decrease from our point of view in gas usage, but I can't see it falling off a cliff anytime soon.
I think, just to add a bit of colour, I don't have too much to add to that. I think it's a very, very difficult question to answer. There's obviously no doubt that usage per head has dropped significantly over the last 5 to 10 years, and so maybe off the top of my head, maybe that's 15-20%. There is clearly a drive to energy efficiency still going on in the UK, and I think some of the government schemes have been relatively successful in delivering a more efficient housing stock, for example. I also, part of my responsibilities is I oversee a business which is an energy solutions business, which goes into big industrial sites and helps them control their energy usage and optimise it. And we are seeing much more demand in the big user space for those sort of products and those sort of systems. So I suspect that sort of designed product will penetrate further and deeper into the market, which will reduce usage. I guess the great unknown for me is electric vehicles and how quickly they come onto the market. And I don't know, this isn't a particularly informed view, but my own hunch is they probably get take up much quicker than maybe people are assuming, not least because of various things we've seen in Norway and indeed in France, where the right targeted subsidy has created a demand for that type of vehicle. So it's an incredibly complex picture. I feel like I'm saying that a lot, so with apologies for that. But it feels to me the energy efficiency drive will continue, and so that probably reduces unit per head energy in the medium term.
Thank you. Mr. Amhinton, would you like
I would very much agree with what Martin says. Yeah.
Okay. Thank you.
On the question of drilling for shale gas, I think you said that you expected the exploratory drilling, if it goes ahead, should be completed by the end of next year, 2017.
Yeah.
How long do you expect it would take to evaluate those findings before reaching a decision as to whether or not you want to do it on a commercial basis? What's the time span between the end of your preliminary drilling and a decision to go ahead?
Good question. So typically shale wells decline over an 18-month period from an initial flow rate before they stabilise at a lower rate, which carries on can carry on for 20 years or more. So a 12 to 18-month window would not be uncommon. But that said, these being the very first wells drilled and tested in the UK shale, I'm sure we'll see some surprises along the way that will either accelerate or decelerate that. But that's ballpark where you're at.
Yeah. And if you look at the likely price of shale gas as opposed to imported gas, we had evidence that suggests that there might be some doubt as to whether or not the shale gas can ever be cheaper than the imported gas, given that imported gas prices are so low at the moment.
Yeah, well, so it depends where it's imported from, clearly. And I'm sure you've had evidence to say that, and it's pretty widely accepted that by 2030 we'll be importing virtually all our gas. That's not all going to come from one place. So Norway is probably a relatively low-cost supplier of gas sitting next door to us with developed infrastructure. We're probably competing in shale gas with imported LNG. And so if you look at US gas prices at about $3 a unit, add about $1 or so to liquefy, another $1 or so to transport, another $1 or so to translate it back into a gas, you're talking about $6 landed in the UK-ish, which is what we have to compete with, and we're comfortable we can compete at that level.
And Mr. Bell of the Climate Change Committee has said to us that shale gas is only okay if it displaces an equal amount of imported gas. What do you say to that?
It's like the Archimedes principle of shale gas. It's an interesting accounting balance, because you end up with a perverse situation where it's actually better for the climate to develop your own gas. But on your books, it's worse because you don't count the emissions of the production of the imported gas. Now, the climate is not British, so I think it's if you take a sensible view of the world, then if it's lower emissions to develop it here than it is to import it from the US, you should be developing it here. And the situation you find yourself, for example, in Scotland, where we're importing LNG from the shale gas from the US, and have a moratorium on exploring for it, never mind producing it, in a country that has led Europe for oil and gas development for 25 years, is beyond belief.
Indeed. Can I just come back to the CCS point? What I'm puzzled about is why, if it's all ready to go, no one's actually doing it on a big scale. I mean, is it cost?
Oh, personally, I think, yeah, it's the economics that aren't proven. But I think it wasn't mentioned before. You've seen last week some of the very large oil companies, BP, I don't know, Statoil are there, Total were there, are putting some serious money into it again. I think the technology, I personally am quite optimistic about it. I think the technology is there, but people haven't been able to make it economic, exactly. Yeah.
I think so. The thing I learned from the Peterhead experience was you have to spend significant amounts of money going through your engineering design phases to make sure that you've got a credible technological solution. And before anybody commits to spending that sort of investment money up front, you want to be pretty sure there is a firm way of regulating that once everything is established. And at the moment, that mechanism just doesn't exist in the UK. I can't really speak internationally because I'm just unaware, but certainly that's the experience in the UK.
Just a final question, Mr. Egan, back to the shale gas. As I understand it, there are 4 sites in the UK at the moment that are being looked at. There's your one.
Yeah, iGas are looking at a site. I don't know where the other 2 are. Possibly, I know INEOS are looking at a number of sites. There are no production sites in the UK, if that's what you mean.
No, I know that. I just wanted to get a feel for how far ahead the industry is as opposed to your own firm.
Oh, I see.
I understand the problem in Scotland,
yeah,
which you have to understand is tied up with Scottish politics.
Yes, of course. Yeah. I don't think anyone else has got an application in to drill a horizontal well. There is an application in Yorkshire to fracture a vertical well, which is subject to an appeal, and there is an application in Nottinghamshire to drill a vertical well, not even frack it. So I think we're, roughly speaking, I would say about 1.5 to 2 years ahead of everybody else. Yeah. Thank you.
Right, gentlemen, thank you very much for your helpful answers. That brings us part of the session to an end. Thank you.
Thank you.